Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Tuesday, November 21st, 2023.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
On with the charts. Let's start with the big picture, work our way into the day itself as usual. I'll start with this weekly chart just to remind you that we had, I'll start with the May buy signal above the mid 160s, 165.07 to 166.48, that set up a long-term expectation for 231.60. I know we obviously topped out in July, fell back to this long-term support. It's held nicely on the way up. This descending channel top at 185.21 this week was considered our next significant long-term upward pivot point. There was also the possibility it actually may have held buying pressures through the rest of the year, and we could have fallen back into the mid 160s within a month or two of doing so. But that didn't happen. And in fact, I've been mentioning how of the two areas, mid 160s or mid 180s, which is likely to give way, it is the mid 180s, was the mid 180s, because of the longer term expectations for 231.60, which may now be realized possibly by the end of the first quarter. Over the next 3 to 5 months, wouldn't surprise me. And that would be right about here on the chart as I'm looking at the XY axis. So that is certainly possible. Anyway, we are bullish, let's just put it that way, through the rest of the year above 185.21, expecting this high not marked at 198.23 over the next few weeks. And in fact, it really kind of looks like this if you zoom in just a bit. This is a 2 to 3, 3 to 5 week target. We're a full week into it now and just about halfway there. 198.23 is our next meaningful resistance for near-term traders anyway. You may have gotten long last week when we closed above 185.21 and you're holding out for 198.23 as a profit-taking area. Aggressive two-sided traders may actually short 198.23 in anticipation of the possibility of bearish rotation back to the 185.21 channel top over the following 2 to 3 weeks. That is a real possibility, of course, but we are expecting a violation of 198.23 at some point, whether over the next week or two or month or two, and if over the next week or two should yield this 216.02 rising channel top within a couple of months at the most. And that is kind of the big picture to the upside. Let's talk about the day itself. I'm going to jump to this chart here. So we've got this 190.69 level. That was a gap closer, and we actually pushed through it Thursday of last week. We closed above it on Monday. It is still session containment, able to contain session weakness, and above which this market remains constructive for the day. We don't turn south. We don't turn bearish into later week unless we were to close below 189.51, a short-term rising channel bottom. So this is a nice, relatively narrow range, bullish above 190.69 through the rest of the week, and we turn bearish just for the next few days below 189.51. Let's work with the upside right now. We do have 192.65 still. That is the low of the high, likely to give the market trouble on the way up, well suited for aggressive day traders. We can top out at 192.65 and fall back to 190.69 on an intraday basis. If we push or open today above 192.65, 194.26 is likely. Simple trend line off the last week's highs, able to snag daily buying pressures only. And if we settle today above 194.26, and we could conceivably, then we probably by Friday's close will reach this 198.23 2 to 3 week objective inside of about a week and a half of its indication. And that pretty much covers the upside. Now, for the downside, I'll take you back to this chart. If we break 189.51, how far south can we go? 188.65 is the next minor point for the day, but it really is a settlement today below 189.51 that shifts momentum into the bearish column, if only for the next few days, 3 to 5 days. I do think under that scenario of closing below 189.51, I don't know by Friday's close, certainly possible. There's only a couple of days left in the week on this abbreviated Thanksgiving week, but let's just say a 3 to 5 day objective down into the mid 180s, 184.59 to 185.21 if we close today below 189.51. The 185.21 level is once again on that weekly chart, that channel top at 185.21. That stems off the July high. And of course, 184.59 is the same exact formation, but on the daily chart. And once again, if we close today below 189.51, expect this 184.59 to 185.21 region within 3 to 5 days, where we can bottom out through the rest of the week, through the rest of the year. And once tested, we can round back up to 198.23 within 2 to 3 weeks, which is now probably inside of 1 to 2 weeks away from being reached, as I just mentioned here, above 190.69. And I don't know if there's really anything else that we need to get into. I can say, and this is probably the last thing I'll say, and it's almost not even worth mentioning right now, but if we were over the next week or so to close back below 184.59, that indicates 179.61 only. And that is a level that can contain weekly selling pressures and is our downward pivot point into later December, then expecting that long-term support in the mid 160s within 3 to 5 weeks of closing below 179.61. But, until then, you've got solid support in the mid 180s. So the way I would clarify this is we are bullish through the rest of the year and through Q1 above 185.21. And we don't really turn bearish through the rest of the year unless we close below 179.61. This range between 179.61 and 184.59 is sort of this murky no man's land of mid to longer term trend identification. It would offer a good 3 to 5 day sell signal for 3 to 5 day swing traders if we were to close below 184.59, but I don't see that happening anytime soon. Once again, if we close below 189.51, we should see 184.59 within 3 to 5 days. That's your next 3 to 5 day swing trade to the downside. But right now, we are in a bullish 3 to 5 day swing trade to the upside, above 190.69, expecting 194.26 over the next day or two, and 198.23, I'll say, by the end of next week, where we can top out on a weekly, possibly monthly basis. 198.23 is our next 3 to 5 day sell opportunity to the downside, and perhaps 2 to 3 week sell opportunity to the downside back into the mid 180s. But I wouldn't fall in love with that notion. I do think that the recent settlement above 185.21 does carry with it longer term implications into the 230s and higher. And that is all I've got. Please click like, share, subscribe, and check out wickedstocks.com. We're off for a lot. You can see it all for free for 5 days. No strings attached other than, your credit card payment gateway. But we will not charge it at all until the 6th day. You have a great day. I'll be back tomorrow with Wednesday's Apple report.